Here we are back at our regular scheduled program. Super excited to dive into this one as we kind of just take a little load off after a crazy election cycle. Turned out that obviously Mr. Trump won, and whether you're for or against that, we are going to talk about a little surprise that may have come to some people. We'll talk about why it happened and what's ahead, so stay tuned next. What's up, guys? I'm Jeremy Kane, living in the Denver suburbs and eXp Realty. Thank you for tuning in. Excited to dive into a little bit of a surprise after election night to some, and kind of discuss what the effect of the interest rates and things were on the election outcome. But while you're here, please like, comment, subscribe. I promise I don't get too political on this show, although we are talking a little bit of politics here today. I often talk about, living in Denver, huge proponent of knowing exactly what's going on in the market. I talk about buyer and seller strategies. So you can use this all across the country. I do know agents in all 50 states. So if you are interested in making a move out of Colorado into Colorado, I'm your guy. We'll get rolling. So obviously, whether you're for or against, Donald Trump will be the 47th president of the United States. And a lot of people were really surprised when we talked about this because the interest rates actually did see a tick up as a result. But the economy was certainly, as we know it in real estate, talking about interest rates, was affected. And so let's talk about a little bit about why it was affected and kind of start there. So first and foremost, what I like to do is go back, right? Since we do have context and Trump was elected in 2016, interest rates did rise about 3/4 of a point, or 0.75%, in the 8 weeks following his election before he took office. And if you remember, it was very similar. The stocks rallied. There was really good sentiment out there in the stock market on the economy. And so what that does is it causes people to take their bonds and buy into the stock market. So money's moving around. Well, while that's great and the economy is flourishing over here, the bond market is directly tied to the interest rates, the 10-year treasury. As night fell and it seemed more and more apparent to at least those in the know that Trump was going to win, the stock market celebrated a little bit. So the 10-year treasury looked like the stock market or the interest rates could see a massive increase. I was talking to one of my buddies, Jimmy Everett, who's a lender, and he was very concerned about, what the interest rates would do come morning based on, what was going on. And so as we kind of step back from that, we have a lot of other economic things. The world will go on for the next couple months until Trump is in office. But, the Fed's expected to lower the Fed rate another 1/4 point. If you watch this, you know that that's not directly tied to the mortgage rate, but ultimately a good, idea. It gives us a good idea of where inflation is and the economy's health as a whole. And, as that goes, I've talked about how that rate drops and the interest rate goes up. And as a result, after election night, the interest rate did rise about a 1/4 point, so 0.25, which the 10-year treasury and the behavior it was having had Jimmy at least thinking that we would see a much larger increase in the mortgage rates. But in all actuality, it still did go up, and that's a surprise to some. And so when we step back and we look at this, we're like, okay, well, what happened? And the truth is that a lot of the economic policies that Trump has carry some fear that it will increase inflation, right? Embargoes and all the trade stuff that he's talking about doing, no tax on tips and all of these things seem to really, feel like we might be driving up inflation as a result. Now, I will say that he did this before, and the tariffs and the things, and, it seemed to work. And when Biden got in office, he kind of doubled down. And so while we're talking all this economy, that's not really my area of expertise, but understand that there is a little bit of a fear that inflation could get worse as a result of the outcome. And if that does happen, and, we'll see what happens actually. But if inflation goes up, typically interest rates are also going to go up. So we could see mortgage interest rates at least hanging tough for a while. Although a lot of people, think that, as the economy is more healthy and things like that, the interest rates will settle down a bit. And so where's all the positivity, right? I'm kind of raining on your parade. The truth is, even in higher interest rate, climates, with the stock market doing well and the economy kind of getting more healthy again as a whole, right? Because if we just focus on the stock market, it actually was doing pretty good under Biden. But as you know, your pocketbook and all the things felt the pain. And so as the economy gets better as a whole, I think our industry will certainly benefit. And it may not be, the feeding frenzy of the low interest rates and the bidding wars and all the things, but when the stock market's better, when people are feeling better, when the sentiment is better, then that brings buyers to the market. They're more likely to, take a 30-year mortgage and do the thing, buy a house, right? And when people buy houses and more buyers come to the market, then the appreciation is going to go. So a healthier economy certainly is great. Now, with our interest rates being higher, mortgage interest rates being higher, people are like, well, I don't know. But here's the deal. What you need to do is just forget about 3 and 4% interest rates. I don't think those are coming back. And look at the whole economic outlook of purchasing a home. What are the benefits, the long-term wealth, and all the things that can be, gained from that? With the economy as a whole doing well, that'll continue to push appreciation, right? So while we may not be feeling like we're getting the best deal on interest rates, if our homes are appreciating at a higher rate, everyone's happy, you're building wealth, and all of the things. And so we will see how it kind of reacts. Interest rates, I was talking to Nicole Ruth today, and she was talking about how she felt like the mortgage interest rate climb that we've seen over the last, 4 to 6 weeks after it was lower, probably was some of this baked in, right? The economy and everything kind of knows what's coming these days. Information's traveling pretty quickly. And so she has a feeling that, yes, after last night's, 10-year treasury jump, the mortgage interest rate should have jumped higher. They remained about a quarter today, according to her. I talked to her at the end of the day today. And so they did just go up a quarter. So at the end of the day, they did go up, but ultimately the overall economic climate is in a really good spot. And I think that's positive for what's to come. I know there's a lot of headlines out there that people are celebrating, realtors get on phones, all the things. So as we kind of see this changing of the guard, I think there is massive opportunity in real estate right now, right? Because if I'm helping buyers, I want to get into a position where, they're like, well, interest rates are going to raise for 8 weeks, and then he's going to get in office. Everyone's going to be, celebrating, and maybe we'll get some better deals. The truth is, the deals are right now in this 8-week time period, and there are homes to sell. Denver has more inventory than we've had in a long time. And so get out there and take advantage of this while it is slower, because as people kind of gain that momentum and we head into spring, that's when you're going to kind of start to see the overall health of the economy affect our real estate market in the form of appreciation. And regardless of, what goes on and all the things there, obviously the no tax on tips and the tariffs and all of those things are on the other side of the new year once Trump takes office. And so we'll see how that affects it. I don't think he's the guy that's just going to come in and slam it and, completely screw up any economy. But at the end of the day, you never know. So as we kind of see this positivity boil up with the stock market and all of that, just know the interest rates are going to be kind of volatile through this time period, and volatile interest rates lead to people sitting on the sidelines, which leads to opportunity for you as a buyer, especially in a higher inventory market than we've had in Denver in quite some time. So I hope this helps. Yes, it's true. Trump did win, and yes, it's true. The mortgage rates went up. It's not the end of the day. It's not the end of anything. I think the market will react as we go. But overall, I think the appreciation and the overall health of the economy will continue to improve at all levels and not just the stock market or whatever. So I hope everyone is okay. I know there's a lot of hurt feelings out there and a lot of really happy people. The truth is, we just got to get to work. as a nation, as a society, love each other, and hopefully we can move past this and continue to live the American dream through real estate. And that's my goal, to help you build wealth through real estate. So you want to chat about that? You want to chat about strategy? I'm here to help. Book a consultation, call below, and we'll get that taken care of. We'll see you next time. Bye-bye.